FTX scandal. Now, I've seen this. I've seen it with Mt. Gox. I've seen it with Bitfinex. I've seen it every single bloody cycle. Yeah, it's every time the end of the world, and guess what? It's not. It's never the end of the world. People say, well, nobody's ever going to come back into this market. Well, I've been around. I've been around the block a long time. I've been 30 odd years in financial markets, and I've seen this with hedge funds. Long-term capital management, the biggest blow up of a hedge fund in history, the Fed had to bail out the whole system. What everybody shouted at them, they're a Ponzi, they're a scam, they're over-leveraged. Hedge funds are uninvestable. Net outcome, the net assets of hedge funds went up 5x over the next 7 years.
Hey guys, welcome back to Library of Wealth. Today we have Raoul Pal on his forecast for the crypto market and the massive opportunities he's investing in right now. It's no secret that Pal has been bullish on crypto, and now we're starting to see the upside in the market for holders of Bitcoin and Ethereum. He says the current banking system is in danger of failing, and fiat currency will need to undergo significant changes if it wants to avoid eventually collapsing. Raoul still anticipates the bull market, and over the course of the next 30 days, he says we're looking at massive opportunity. Let's listen to Raoul Pal as he gives his take on the future of the crypto market and what his investment thesis is for the coming few months. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
So, where are we in the crypto market? The most important thing about understanding crypto is understanding how to price it. And how I price crypto is essentially two major factors. One is global liquidity, and I use Global M2 as the main understanding of that. And then there's and that's the cyclical element. And then there's the technological adoption, which is the long-term logarithmic trend. So let's deal with the cycle first. The cycle is what causes all of the pain. And I've been in this space since 2013, and trust me, I know pain. The first time I bought Bitcoin was at 200. It went up to, I think it was 1,000, then back down 85%, languished for a year or two, and then went up 10x from my entry price where I sold out. And then it came back down again after going up another 10x, then it came back down again. And I've seen these cycles. And at first, a lot of people correlated them to the Bitcoin halving cycle. And I think that's probably coincidental. And it's the fact that the economic cycle works in about the same time horizon, this 4-year period after 2008, that the Bitcoin halving cycle does, because it was born out of the crisis. And really what I think is going on is it's the debt refi cycle, because there's so much debt in the global economy. And what happens is they try and tighten rates, and then you've got to refi all of this debt, and rates come all the way back down again, liquidity comes back. And I think the stasis, the natural tendency is for there to be ongoing stimulus, because a overly indebted economy, and if you think of GDP growth being population growth plus productivity growth, well, with aging populations, that's out of the equation. And it seems that immigration is a political no-go, particularly with real wages so stagnant. So then you've got productivity growth. Now that's not been growing either. So the only way of funding GDP has been debt. But now it takes $3 of debt to drive $1 of GDP. We kind of get to the end game, and there's just so much debt out there, it never gets paid back. So the only way of running an economy now is allowing for the increase in debt, but what services the debt is the cash flows. So therefore GDP growth must be higher than debt growth. If not, you need to run negative real rates. GDP growth, because of aging populations, low productivity, has come down too low to service debt growth, and therefore you run negative real rates, quantitative easing, and other such stimulus. That is the way the world works. So if you look at this chart here, this is the year-on-year global money supply versus Bitcoin, and you can see they're hugely correlated. Now, what's interesting, you see the tops of the charts, they're all missing because the scaling doesn't work. Because of the technological trend adoption, when you get the rallies, they tend to massively overshoot, even versus where liquidity is. And that extra is the extra trend that drives the markets forward over time.
Pal says that if his view on the asset allocation process is accurate, then there will be weaker growth and the Fed will begin to come into the picture. He believes the most important thing to do is purchase crypto. Raoul notes that the entire financial world is short on the crypto upside. This means that the more prices increase and regulations shift, the more they have to be included in the crypto market.
Now, every time we see these trends, the boom and bust, everybody shouts scam Ponzi, but that scam Ponzi phase is actually just driven by the monetary tightening cycle. Now, there is a lot of speculation in crypto, I get that, because there is in most new technologies, we get that in technology stocks themselves. So right now, we are at the bottom of the monetary cycle. Going forwards, we know the Federal Reserve is going to start increasing rates at lower increments. I don't think they go much further than maybe this 50 now. Maybe they try and eke in another 25 and try and keep rates stable and then wait for CPI to fall below Fed funds rates, which I think happens March, April. So I think next year is a game of dramatically changing liquidity conditions. I think inflation is lower. I think the crypto markets are going to be explosively better this time around. We're also seeing a lot of interesting things like the RSIs, weekly RSIs in Ethereum and Bitcoin are right down at levels that have always seen reversals. We're seeing it with on-chain activity. We're seeing it with minor capitulation. We're also seeing it with volatility. The 30-day realized volatility of both ETH and Bitcoin is at levels that always precedes the large rallies and the big reversals. So I've pretty much got everything in place. Is it possible to get some other down leg? I doubt it, unless something can drive bond yields high, and I just don't see that outside of a temporary blip because one of the inflation numbers or one of the employment numbers is skewed somewhat. So I don't see that happening, so I think we are moving higher. I think ETH based in June, and I've said that for several months now, in fact since June when I started adding to my positions. The bottom of the cycle is always it's a scam, it's a Ponzi, all the media hates it, everybody throws at each other online, everybody's looking for blame, looking for scapegoats. We are exactly in that point now. It is ugly out there, and that ugliness out there is a real measure of where we are in the cycle. So we're at the despair and anger phase. And then we have the acceptance phase, which is the boredom phase, which I think we've rolled into, where prices don't do anything for a while and everyone starts getting fed up and moves on elsewhere. You can see artificial intelligence is getting people's attention just when they should be looking at crypto as well. Don't forget, artificial intelligence is not really investable for most of us because it's all VC, while crypto is real-time VC that we can trade, which is part of the magic of it.
Pal says that regulations have had a bigger influence than anything in the market since the introduction of Ethereum and stablecoins. Raoul has always been max long on his positions and continues adding to his portfolio. He has invested across multiple digital hedge funds and has observed that many things are being overbought. He says that during this time in the market, it's smart to immediately seize opportunities and to not wait for new lows to come in. What do you guys think about Raoul Pal's take on the future of the crypto market? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.